Hey guys, Mike here. I want to go over another video with you guys on how to trade news events. If you watched our afternoon show, you saw us trade live on the release of the FOMC Fed minutes, and we had some pretty good trades. So I thought it'd be important to do a quick video on really how to structure and prepare yourself for a news event so you don't get yourself chopped up. So let me share the screen and let's take a look. All right, if you look here at the ES minis, and that's what we were trading today, you can get a feel for what's going on. Now, the biggest thing as far as trading news events is to be prepared. As a trader, preparation is the biggest determining factor as far as whether a trader is going to be successful or not successful in a trade. And trading news events, no different. So the very first thing you got to do is you got to take a look and make sure you understand what you're trading. And it always begins with a top-down analysis. And the key is to find the liquidity zones and find out where the support resistance levels are. And really, you can really only find those on the upper time frames. That's where you get your edge. The first time frame that we're going to look at is the 4-hour chart on the E-minis. If you can look at this chart here, you can see nice little downtrending trend line that we have. We had a little break above here. Typically with a good trend line, you want to have at least 3 touches. And, we got a nice one here. You got one in here and you got a nice touch. And then, we had a good touch coming into today. So, the E-minis were kind of popping up against that trend line. And you can see today with the news event, we did break above and we're currently above that trend line going forward. We also had a downsloping, higher low trend line that we're looking at as well. So the 4-hour time chart is going to give you a good edge as far as, what direction that you're looking at for the a product that you're trading. The next time level that we're going in is we're going into the hourly. We're looking at the 200. Obviously, what we like to see is stocks that are above the 200, typically on the hourly, are in a bullish transition. If they're under the 200, then it's a bearish mode for that stock. Now, if you look in here, you can see the ES has really, the 200's been a lid ever since we kind of broke down here last week. And we've kind of been wedging up into the 200 and wedging up into this trend line at the same time. So yes, looking forward, it looks like we're in line for a nice little breakout. But don't forget, we had a nice little higher lows developing here that we broke and eventually went down and printed new lows. So you got to keep that in mind as well. But it does look like we're in for a nice little breakout. We do have a nice hourly level here that we did mark off on our daily charts. The next level you want to take a look at is the 15-minute. Now, with the 15-minute, what I have coded on here is the 5 EMA from the daily. And to do that, you got to do a little calculation. But if you do the 130, and actually it's the 5 simple, if you do 130 minutes, okay, that's going to give you 5, or that it's going to be equivalent to the 5-minute on the daily chart. So you can have that chart now on your 15-minute. And again, a stock above the 5-minute on the daily is typically in a bullish trend. And you can kind of see here, over the last week, except for this small little dip in here, we have reclaimed this this 5 moving average, and it so typically this would be considered possibly in a bullish mode. You can see the higher lows also on the 15-minute. Now on the 15-minute, you get some really good liquidity zones, and these zones today provided really good support and resistance, really good opportunities for us. And the first thing that you're going to want to look at is the prior closes. So I have this coded in from Thinkorswim. All these green lines, these are the prior closes that the ES has had, and they provide with some really nice liquidity in here as far as some really nice support resistance levels to look. Obviously, a close, and dealing with the ES, you're dealing with the futures market, you're not dealing with the stock, so it is a little bit different. but it's still good levels to take a look at. So after doing the 15, find those levels, now you're ready to trade. We also use volume profile analysis. So we're looking at value area low, we're looking at previous value areas, and previous areas that are point of controls and pivot zones that have been important in this product going forward. And so here is a look at the chart for the ES, because again, trading the E-minis. And it was a pretty good trading day for us because we had a couple good areas kind of pointed out in here. You can see 930 as far as the RTH open. And, you know, this level here, this 39.75 has been an important pivot level, important point of control. You can see that 15-minute level that we pulled in. These are important liquidity zones. And why it's important to understand these, you know, having been a former market maker, I understand a little bit more underneath about the dynamics. And the problem is for retail traders, a lot of retail traders, they're trying to trade breakouts. They're trying to trade, you know, when they feel comfortable. And that's where they typically get their pockets picked. So what happens as a market maker, they're constantly searching liquidity. And what do we mean by searching liquidity and grabbing liquidity? It means that, you know, they're constantly, market makers constantly have to fill orders. And, you know, if they can't fill the order on the book, sometimes they have to play it off their own book. And so what occasionally they will do is they will go and grab some orders that are common stop places or entry places that they can grab and then take the other way. So if you look here, when you see wicks, okay, now we're looking at a 2-minute chart. A lot of times we like to look at a 5-minute or a 15-minute, but I wouldn't go underneath a 2-minute chart when you're looking at these type of stocks. So anyhow, if you see here, this has been an important area. This 39.75 has been an important pivot area through the last week and a half. Okay, it's, you know, it's been a major point of inflection for the markets, and so we knew that was going to be an important area. We have our 15-minute level that we pulled off the 15-minute chart, and so you can see when you see a wick like this to the upside, okay, what happens? Well, retail traders typically, they, you know, they're watching, they're trading, and then they typically try to trade breakouts. Well, a lot of times when they're trying to trade breakouts, that, you know, the odds of being successful in a breakout, especially in this type of market, not very high. And when you see a wick like this, what this is this is the market maker going up, grabbing liquidity, and then of course what happens, they pull it right back down. So they're going up, grabbing the orders, because there's, think about it, there's a bunch of traders, you know, we're not the only ones that see these levels, but the problem is we treat these levels differently, right? And so again, it's not just about the levels that you set, it's how the security, how the stock reacts around those levels. So when you see a wick up here, okay, what they're doing is they're grabbing all these orders that are sitting on the market maker's books, okay, because you got stop limit orders sitting there, and they're grabbing those orders, grabbing the trades, and then now that they filled the orders that were open on their books, they're now running it back down, because let's face it, especially in this type of market, where the book is very thin, the order book is very thin, especially historically. You look at the E-minis, you look at level 2, very historically thin from a liquidity standpoint from where we are. And that's why really the market's having a hard time staying up, because the buyers just aren't there. And you're starting to see this whipsaw action. And a lot of times you see price action jump. Well, it's because of the fact that the book is so thin, it slices through rather quickly. Okay, so up here, we had a nice short. As you know, we saw this liquidity grab. They grabbed it, brought it back down. Here's another liquidity grab, taking it down here, bringing it back up. You can see these little wicks, and then finally, you know, when you see it close down here, and you see get a nice little break, this is when you know it's pretty good to go in short. So you can see these. You can see these nice wicks and reversals, and it's not a coincidence that they run it the other way after these reversals. You can see this is an area we labeled must hold. So what did they do? They took a nice long bar, broke it down. So what really this video is about how to trade news events. And, you know, look, the FOMC book, minutes being released typically isn't a big market mover, but in this age of really, we're now the Fed is front and center because they're basically reversing course. They're taking the liquidity away. They're not being as accommodative. And so any piece of information you can get about that, definitely important. So now the FOMC minutes coming in today was a very important report, because you got to understand the FOMC minutes isn't just the minutes of what happened in that meeting. I mean, they could have released those minutes right after the meeting. No, these minutes also, they add additional commentary in there. It's got to be voted on. So, it's a little bit more. So it's just another piece of information that the market participants can grab. Now, when you have a news event, we talked about trading Fed days and stuff like that. There's typically 3 moves, okay? There's typically 3 moves. You get the first initial reaction, okay? And you get the initial reaction. That's typically the algos coming in. They're hunting, pushing the stock or security one way. And then you get typically a mean reversion where they're taking their profits, pulling it back. And you got to remember, futures, and especially the market, the ES, it's an auction market. So they're constantly testing for value, trying to find fair value. So they're going to, when you have a news event, they're going to test for fair value to the upside. They're going to test for fair value to the downside. They're trying to find where are the buyers, where are the sellers, and where's that equilibrium going to truly be. Now, the other thing you got to take in account is what type of news event. Okay, so at FOMC new minutes release, we consider that to be a clearing event. Okay, and what is a clearing event? Well, it's an event, it's a news event that's coming out, it's prearranged that's coming out, and it's information that really, the chances of finding some surprises in there are very mute. And it's also, the market participants, it's old information. A lot of it's already discounted. So, really what a clearing event is, an event where traders have stayed out of the market because, hey, it is a news event and people are focused in on it. But, they're really just waiting for that event to clear. Okay, so they get all systems clear to say, okay, I now have that risk past me and I can start putting my money back to work if that's what I wanted to do. So that's why you typically get the markets kind of very, very mild and coming in, and they start to slow down as we get towards that event, and they pick up dramatically after the event. So the FOMC minutes, we consider that a clearing event. And so what you want to do is you have your zones, you have your liquidity zones, where your support is, where your pivot points are, where your resistance is. So we had a pretty good bias that the market was going to go up because of this situation. Now, looking in here, what you want to do is you want to allow those 3 events to happen. And actually, you want to allow the first 2 to happen. You want to allow the first move to happen, which is, at 2 o'clock, this is exactly what happened. They drove the market up. And so right there, at that level, that is, okay, that's the topping. Okay, that's the top end of the range. So you want a range to develop. Just like a lot of times in the beginning of a market, you're waiting for that first 15, 20, 30 minutes to develop that opening range so you have some levels to trade against. Same thing with a news event, okay? What you're looking for is clues to whether buyers or sellers are going to be in control and how the market's going to disseminate that information. So we had an upper range, and then after that initial move up, we had the mean reversion, which is the opposite move down, and we got that move right here, and we created this bottom wick. So now we have our opening range in here. Now, what we like to do once we feel our opening range has been put in place, we like to draw Fibonacci retracements off of the range. So we did do that, okay? And then we like to see how stock price works within that range based off the Fibonacci. And if you look here, you can see it worked out really well. So once we found sellers, so basically buyers, they pushed it up to this range here, then they brought it back down, tested the selling range. And what we saw rather quickly within here was that buyers, sellers really couldn't get in control. How do we know? Because look what they did. Okay, let's take this Fibonacci off. Look what they did. They drove it down, created a wick below the level that we labeled must hold, important level. Well, they drove it down, grabbed some orders. Okay, you should understand these wicks now. Grabbed some orders, and then they started to proceed and bring it back up. So for us, as we started noticing this, and we did trade live on the show, As we started noticing this, we then decided to, okay, let's draw Fibonacci. Let's look for levels that are starting to support. And we established some positions right in here based off of the 200. We also were buying off of this retest in as they failed the 50 to the T right here. They failed the 50. We know at the 60, excuse me, the 61, and they failed the 50 here, and they brought it right down. And so, we bought off the 38.2. We had a nice stop loss put down at the 23. Okay, so this was our stop loss, and we know if it came back down that, okay, buyers ready maybe aren't ready yet, and you may have to, in some of these news events, you don't want to get whipped around. Okay, this happened to be an easier news event to trade, but so we got in, and we took it to our target. So our target was right up towards this level here. Okay, and it was a really good trade. So we took it up as it started to, we took some off in here, and then as we broke out, okay, they started grabbing some liquidity. And so we had the bulk of our trade here. We took some nice profits into this range here. And let me kind of take this Fibonacci off. So we had some nice tops here. And so we took about a half of our position off. We kept our runners, okay? And then as we proceeded to go back up into this area, took another fourth of our position off, because look, this was a major area, okay? The beginning of the morning, it was a major area where we topped out, and you knew it was going to be a major area here. So it's not a coincidence that the market was kind of, beating its head against this ceiling. And you can see, they were, again, you see these wicks, they're going up, grabbing people, driving them back down to the 100% level on this Fibonacci, and bring them down in this zone. Okay, so this was a lid. This now becomes support. And then, so we kept on. We took a couple trades in here where we bought the wicks down, sold the wicks up, bought the wicks down, sold the wicks up. We did a couple of those trades. And then once we closed and had the second bar up and found this retest, that's the key. Okay, A plus setup is when you have a breakout and then a retest. And you don't get a better setup than that. And we finally loaded up in here for this big gain up into here. So we had 3 trades in here. We had the initial run up, we had the scalping trades in here, and then we had the retest and the really good push up into here. Now we did try, and we were ready for some shorts in here, and we actually, we did try, and it looked like we were going to fail when they had this liquidity grab. It looked like we were going to fail. And so we did take a couple shorts in here that we got stopped out because we thought it was going to break. And a lot of times you want to see this level break first because it looked like this was going to be too big of a level. I mean, this was a pretty nice long time that it spent in this area. But they finally broke it through, got out of the shorts. And once we got here, it was a nice run up. And, this is why, guys, you have to know your levels, okay? This is the only way you can trade this without getting chopped up. This is the only way to trade it going forward. So it's really important. And one of the other charts I just kind of wanted to bring up is a Renko chart, which is a tick range chart. And if you look in here, it kind of gives you a better idea of the different types of zones when you're using it. And we're using a 10 tick Renko in here. And it's giving us some good feedback. So you can kind of see 2 o'clock, this is the high, this is the low that was created. And if you notice, it takes the wicks away, and you can see, look at this level, this level, this level, the break, and then you got the smooth levels, and then straight on up, and then you got the reversal bar coming down. So we also use the Renko off to the side, helps us with direction, helps us get a better feel for where the market's going, and kind of give you an edge. So I hope this helps you. Okay, every news event is different. This was an easier news event to trade. What we recommend for most traders is to not trade these events. Wait until the event is over. Wait until the next day when you can define whether buyers or sellers are in control. But I thought it was a good thing to kind of look at this and see how we look and trade Fed events, news events, and hopefully this helped you. Well, that's it for me today. I hope you guys are you're surviving these markets and you're becoming very profitable, and safe trading.